Today, growth in credit eases back. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, today we're going to discuss the latest for the credit statistics, which of course has come out. They're actually to the end of July, both from the RBA and also from APRA. And this is important because it gives us a bit of a read as to what's going on with regard to the momentum in the mortgage industry in particular. And there are some very important messages there in terms of what we're seeing. So to start, let's look at the APRA statistics first. This is the monthly authorised deposit-taking institution statistics. This is for the banks essentially, and it was released today on the 31st of August. And if we look firstly at the change over the month, we can see that owner-occupation lending rose by 0.32%. That's the lowest, well, for quite a long time actually. Investment lending was also down 0.22% actually growth, so that's again significantly lower than previously. And the total was growth of 0.28%, considerably lower than the previous month or two. And of course, as expected, I always argued that once interest rates started to rise, we would see the momentum for lending ease back, and that is precisely what we're now seeing. Now, just to give you some further definition around that, the total loans outstanding for mortgages, both investment and owner-occupier, are now $2.015 trillion. That's a record again. And both sides of the ledger, both investment and owner-occupier lending rose, just more slowly. And overall, the proportion of loans for investment purposes is now down to 33.06%. The other thing we can do is to look at the selected portfolio movements month over month. And it tells quite an interesting story. The blue represents owner-occupied loans, the orange investment loans. And you can see that by a country mile, Macquarie Bank is still writing considerable volumes of investment loans, along with Suncorp and ANZ Bank. Whereas Commonwealth, Westpac and NAB are focusing much more on owner-occupied loans. It's also worth noting that some of the smaller businesses are seeing a reduction in their investment portfolios, for example, Bendigo and indeed National Australia Bank. And the Bank of Queensland and HSBC and ING are showing falls in their portfolios. Now, the point to make here, of course, as I keep saying, banks have different strategies, and I do find it interesting that some banks are still flogging investment loans like you wouldn't believe it. But of course, the real battle at the moment is for owner-occupied loans, including, of course, refinance loans, which is a high proportion of business being written at the moment. Now let's go to the RBA statistics, again released today on 31st of August. And they showed that total credit grew 9.1% year ended July 2022, compared with 4% a year earlier. Housing lending grew at 7.7%, compared with 5.8% a year earlier. Personal lending was down 1.5%, compared with down 5.9% a year earlier. And business lending is at 13.4%, compared with 2.3%. And broad money is at 9.2%, compared with 7.9%. Looking at the movements on a monthly basis, total credit was 0.7 compared with 0.9 last month. Housing credit was 0.5 compared with 0.6 last month. Personal credit was up 0.2% compared with a fall of 0.3% last month. That is a concerning metric because that suggests that more people now are turning to credit to try and deal with their financial flow problems. Business credit was 1.2% compared with 1.5% the previous month. And broad money is down. It was 0.4% compared with 1% previously. If we then look at the monthly movements, Now, as I often say, these monthly movements tell you something but not a lot, because they're very volatile, of course, and do move around. But nevertheless, they give us a bit of sense of what's happening quite immediately. And so lending for housing was 0.51%. That's down compared with last month. Of which owner-occupation loans was at 0.54%. And investment lending was at 0.48%. All of them are turning down. Personal lending was just 0.22, so it's actually into positive territory. And business lending was 1.24% over the month, down from last month. And if we look at the credit aggregates, total credit grew by 0.74%, so that's lower than last month. Broad money was at 0.44%. That's down quite considerably compared with where we were previously. And that, of course, is as stimulus is removed and as the economy normalises. If we then look at the annual movements, housing is a 7.68%. It's coming back now. It was a little higher earlier, but it's still quite high. Of which owner occupation is at 8.27%. That's down quite considerably now and continuing to trend down further. And investment lending is at 6.53%, actually steady over that period. Personal credit is down 1.48% over the year, and business credit is up 13.4%. Now, that may sound superficially quite good, but I can tell you that a lot of business credit is purely for working capital, because essentially costs of everything are going up, and it's also taking a lot longer than previously for businesses to get paid, because other businesses are holding up payment flows to try and protect cash flow. And by the way, the taxman also wants their pound of flesh, and of course they won't wait. If I then look at the aggregates on an annual basis, all credit is up 9.14% over the year. Broad money is at 9.24%. And you can see that broad money is coming down, but credit is rising. And finally, I'll just give you the 3-month aggregate view, because in a way that gives us more immediacy than the 12-month view of what's happening. And there, housing credit is up 1.73% over the quarter. You can see it's been trending down now since about January time. Owner occupation lending is continuing down as well. It's at 1.77%. And that actually reached a peak last year in about June and July 2021. Investment lending is also trending down now at 1.67%. We did have a little bit of a peak earlier this year, but with higher rates, it's not surprising to see it beginning to come back again. Personal credit is 0.04% in positive, and you can see actually that the momentum over the last 3 months is also relatively weak, but remember that it was in negative territory through the last couple of years. And business credit at 4.26% is down just slightly. There is some volatility in the business credit numbers, but again, I'd underscore a lot of this is to do with working capital needs. So what do we conclude from that? Well, it's clear to me that higher interest rates are now beginning to have an impact on credit momentum. And bearing in mind the lag between when the RBA makes some movement in the rate, it's going to take a couple more months to see this really filter through. Nevertheless, it looks to me as though credit momentum is going to ease quite significantly, and that's going to put significant pressure on the banks in terms of trying to grow their business. They're also under margin pressure at the same time. And of course, households are able to borrow less now. The borrowing power is now around 22% lower on average than it was the end of last year into the beginning of this year before the RBA started to move. And that means that people will not be able to borrow as much credit for the same amount of income and expenditure. Therefore, the projections are, I think, ahead that rates for credit growth will continue to deteriorate. And it's also worth reflecting, of course, that property prices are directly linked to credit availability. As a result of that, my expectation is that we will continue to see property prices grind lower as credit is getting harder to get and as the borrowing power continues to be reduced. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.